This is the Rich Dad StockCast with Andy Tanner, the show that kicks 401ks in the asphalt and teaches you to be the master of your own stock investing domain. And here's your host, Greg Arthur.
Welcome to the show. This show doesn't have a exact title because I'm not exactly sure where Andy's going to take this conversation. So it's either going to be investing with penny stocks or it's going to be should you invest in penny stocks? And you'll probably already know the title by the time you watch this, but I currently do not know the title. So Andy is here and he is going to educate us. But I first wanted to, Andy, what I wanted to do is read something from chapter 5 of Rich Dad Poor Dad.
Okay.
And the reason is because Robert mentions he calls them small cap stocks, but my understanding is it's basically the same. But I wanted to read to you what he says in chapter 5, and then I want to see if I can clarify it and get your thoughts on it.
Okay, I'll do my best.
Here we go. Chapter 5. Personally, I use two main vehicles to achieve financial growth: real estate and small cap stocks. I use real estate as my foundation. Day in and day out, my properties provide cash flow and occasional spurts of growth in value. The small cap stocks are used for fast growth. All right. So I'd read this before and I didn't really think about it until we started doing the show. That Robert, well, we both know he's not trading in small caps now. I don't even know if he's trading at all now. And Robert doesn't want fast cash anymore. In fact, as soon as he gets cash, his biggest problem is how fast can I get rid of it? Mm-hmm. So I don't want to mislead anybody and say Robert's doing small cap trading, penny stock trading now. But I did want to get your thoughts about, is that a good vehicle for fast cash? Have things changed? This is a 25-year-old book. And get your thoughts on that.
Yeah, I have three thoughts right out of the gate. Bam, bam, bam. Right. First, let's talk about the difference between a penny stock and a small cap, because they are different. Oh. A small cap stock can be way expensive. It can be much more than just pennies. So you have, huge like mega cap and large cap and mid cap and small cap. And the word cap is short for capitalization. Much like a real estate, what's your cap rate, right? Capitalization rate. So cap is almost referring to capitalization. What you do is you're really trying to figure out how much the building is worth or how much the company is worth. So one metric you could use to say, how much is Apple worth? Like if you wanted to buy the whole company, what would you do? Like Elon Musk says, I'm going to buy all the shares of Twitter and take it private if the SEC would let me, right? And I'm going to let free speech ring. What that means is he's going to have to buy all the shares, like buy them all. So, and he has to hope the price doesn't go up.
Right.
So you take the price of stocks. So let's say you had a company that was 100 shares and it was $100 per share. Well, $100 times each share would be $10,000. There's your market cap. So when you talk about large cap, like an Apple, or like a Tesla, that's $1 trillion.
Right.
That's mega cap, right? That's huge, large cap, right?
Okay. Small
caps are smaller than that, and you can get them down into the hundreds of millions and into the millions. And so if you look at what an index called the S&P 500, those are all large cap stocks. They're very large companies. The Russell 2000 is 2,000 small cap companies. And so the idea behind a small cap company is, hey, we're small. We don't have many shares, and maybe our price isn't as high. We're smaller companies. We haven't like Apple's going to divvy up. They've split how many times? I mean, there's a zillion shares of Apple, right? But maybe there's less shares of a small cap. The advantage of a small cap is higher risk, but as Robert said, a greater chance for growth. So if you took a company like Pfizer or Procter & Gamble, be perfect. Procter & Gamble is a snoozer, right? It's like they make, detergents and whatever they make, right? They're not going to have huge growth. You're going to look at them more for income from a dividend, maybe something like that. and they've matured, right? They're still wanting to grow, but they're not the up and comer that's going to be boom. Where'd this come? Oh my gosh, look, Uber, wham, right? New. And so Robert's right in the idea that if you want to take a little more risk and you want growth, a small cap it'd be the way to go. Now, a penny stock is a little different than that.
Wait, the risk is basically that they're not as established.
Exactly. You're new. I mean, I don't know if this statistic is true, but you hear this, 80% of businesses fail in the first 5 years and all this. So when you're not as established, you're not as big, bigger companies can come and wipe you out. It's very difficult to compete against big in size and power. And so but yet, if you can, I mean, imagine if you'd have bought Apple when it was first, ready to go. And often small caps grow into becoming a mid cap and into a large cap. Sometimes they do.
No, it's really clear. I always thought small cap meant the price was small, but what you're saying is the ultimate
price times the number of shares is.
Yeah. Okay. Yep. Gotcha. Thank you.
And there's some, when we say small cap, you can find some pretty big small caps, right? But they're not like these mega, Amazon, just insanely, $3,000 a share times a zillion shares, these multi hundreds of billions of dollars companies. Those are mega caps and large caps and mid caps and small. Okay.
That's clear.
Penny stock is a little different. You have some exchanges. You have the Amex, the American Stock Exchange, the New York Stock Exchange, the NASDAQ, tech-heavy NASDAQ exchange. These are major exchanges, and they have a higher degree of regulation with the SEC. If you want to get listed as one of these, you've got some pretty big litmus tests to pass and hoops to jump through and, papers to file. And you're going to have to report your stuff with precision, and every month or every quarter you'll file a 10Q, and every year you'll file a 10K with the SEC saying, hey, investors, here's our financials, here's the risks we see in our own business. I mean, it's pretty tight. A penny stock, those are generally traded on what we call the bulletin board or pink sheets, and these are stocks that are often, we don't have as much fundamental information on them yet. There's a lot of fraud because you can go public with just an idea. If you can promote your idea and say, hey, we're raising money and you can get in on this for pennies, you can raise cash that way. And so these penny stocks are usually extremely new and not established. And it's usually, my cousin-in-law told me about this. Right. I do not trade penny stocks for a couple of reasons. Number one is I like dividend paying stocks. I like stocks where I'm an owner of a company that cash flows and it's going to pay me. If you're investing in a penny stock, they might not even cash flow yet. You're hoping some way that they will and that it can go well. The attractiveness of penny stocks is that they're cheap. And the problem is price is what you pay, value is what you get. So if you have a consumer mindset, like think about this, you go into Nordstrom and you're looking at some jeans and the clerk comes up and says, may I help you? What's the first thing out of a consumer's mouth? How much are these pants? They're obsessed with the price. If you want to have some fun, go to Nordstrom's and have an investor mindset. When they say, may I help you? Say, yeah, what's the return on investment with these? And they'll call security and say, there's a crazy man in the store. And so the reason penny stocks get attractive is people think it's a bit of a greed play. You think, well, golly, if I invest in this for 5 cents and it goes to $1, I'm rich. And if I lose, I only lose so much. So penny stocks are volatile, and they're also largely illiquid, meaning that it might be hard to unload a lot of shares. Let's say it does jump, it's harder to unload those shares if you take big position. Now, let me tell you where I'd be a fan.
Wait. So it's harder to unload because there's fewer people that are interested in buying.
Yeah. Like today I made a trade and I bought some share. I bought some more Coca-Cola. And the moment I released my finger from the mouse, click, it filled. I mean, not quick, at the price I wanted, that fast. And so, I bought some more Coca-Cola actually to hedge some covered calls I wrote. And so since I'm going to get called out, I'm going to buy it and get called right back out. And my original shares continue to grow. It's a very easy strategy.
Okay.
So,
no, wait, well, hold on.
That's liquidity we're talking about.
Right.
Really, to just do stuff like that, bam. Penny stocks, not so much. Also, they're not optionable.
Okay.
And you've heard me say before that without options, I probably wouldn't trade a stock because I have no dividend with a penny stock. They're not optionable. I mean, why would you option those? They're a penny.
Right.
And so there's not protection there, and there's not income by selling. You couldn't write a covered call on that. So they're not attractive. But I am a fan because here's why.
Wait, before you tell us why, you said one other thing I want to clarify before we get into the benefits of it. I don't understand how you buy them. Where you go. You mentioned a pink board or something.
Yeah, your brokerage, you can go to your regular software and you can type it in. You can type in their symbol. It's usually a longer symbol. Like AT&T is like T. That's it. Apple's like AAPL.
Right.
Sheet stocks are usually longer, and you can still trade them on the brokerage, but it's just not going to go through the major exchanges. It's going on the pink sheets and bulletin board exchanges.
Okay, gotcha.
Yeah,
so now you want to
trade them.
Now you want to say all the great things about penny stocks.
Well,
but wait, before you do, you know what we should do?
Oh, you're gonna do this. You're so good at this.
We're going on a break.
I can feel it.
Yeah, we're getting a commercial.
Hi, this is Andy Tanner from the Rich Dad StockCast and founder of the Cashflow Academy. If you're enjoying what we're teaching here, then I think you'll also really enjoy a special on-demand web class I've created for you called How to Cashflow Stocks. I'm giving this free training to you because it's never been more important to enhance your financial education. Hey, who knows where the market will be next week or next year? For me and my team, we really don't care because we use strategies that will give us protection and cash flow no matter what is happening in the market. So if these are the kind of investing strategies you'd like to learn for yourself, go to StockCastBonus.com now and get this training at no cost. You can access this free training right now at StockCastBonus.com. So head on over to StockCastBonus.com now, and I'll see you on the inside.
Okay, we're back. I hope you enjoyed the commercial or commercials. I really don't know. And Andy is now going to tell us what he does like about penny stocks.
So this is going to be a strange answer, and it's a context answer. Is one of the things that my students at the Cashflow Academy, we work very, very hard to give education, the how to, to do stuff, but we work on context and temperament. I think that's one of the big blessings or things I've received from being in the Rich Dad Advisor Group and being with Kim and Robert for so many years is they have a context that most people wouldn't understand. Very wealthy people think, there's the wealth mindset, it's just different. So what's interesting about this is people's mindset is very much about result. We had an episode, I think we called Be, Do, Have. And people are like, I want to have this, I want to do this, but they don't get the B part. And they're so focused on result that they discount the value of process. Mm-hmm. So for example, if my wife is going to do a fitness competition, she'll put a date on the calendar, says, I want to have this trophy. But the process is the bigger part of that. And enjoying the process and learning how to lift those weights and learning how to do the cardio and the nutrition the right way is a skill. In other words, she knows how to prepare meals with skill. She knows how to have form and reps and sets to really tweak the tiniest little parts of each muscle. She's very expert in that stuff.
Just for everyone listening or watching, this woman has like no body fat. She is gorgeous, and she takes this man, if I met her in the alley, she would kill me. Well, she's so full of muscles. She's amazing.
She wouldn't hurt a fly. but she takes tremendous pride in that, right? In having a certain level of body fat and all that stuff. But it's the process that she loves even more so than the result. In fact, the last competition we did was up in Boise, Idaho. And, she couldn't wait to get out of there and just, go out and have dinner and have fun, because it's kind of like the process. Like the day she walks in, she feels she's won it anyway, because she was there, right? She's on stage. But that process is what's important. So the reason I would like a penny stock would be for this reason. Someone might say, Andy, I want to start a business. And I'll say, well, have you practiced before you are going to perform in business? Well, what do you mean? What do you mean practice? Well, I go, would Tiger Woods practice before he went to the Masters tournament? Would Pete Sampras practice before he shows up at Wimbledon? Well, yeah, but how do I practice in business? I says, well, join a network marketing company. Find a product that you like, whether it's a nutritional product or cleaning, but whatever it is, and practice. See if you like selling stuff. They'll have a presentation built in. You'll have to prospect. You'll learn what it's like to approach people and ask them for money. And there's personal growth in having to ask someone for money. There's personal growth in having to sell and prospect and manage a balance sheet and inventory and all that stuff. And in franchises, there's $1 million in McDonald's to practice with that. But a network marketing company, I don't care if I made a dime in it, I would just go practice, because the purpose wouldn't be to make money. The purpose would be to learn. And so if I were to go to the gym before I say, well, I'm going to go do a bodybuilding competition, no, let's practice first, right? Let's just learn what the machines are, learn what the reps are, learn what the food is, and practice. So the first trade I ever made was on a $16 stock. So not a penny stock, it was $16. And I did 10 shares. That's $160. Now you can tell that I wasn't trying to make $1 million. Even as a new trader, even I wasn't stupid enough to believe that off a $160 trade, I just wanted to jump off the diving board and see if it worked. Yeah. I wanted to learn how to click the mouse, what button to push, how the money transfers from the money market account and the stock comes in and then I sell it. And I think I made $1.60. No, I made $16 on it. Moved 10%. I made $16 on it. Now, back in those days, the trading, now you have no trading fees. Technology is so awesome. You have back then, $30 to trade it. So I spent $30 to make $16 because I wanted to understand the process. So I would be a fan, like Kim Kiyosaki was awesome. We were in Argentina with my kids, and she got up and gave a speech. And Kim, even though, they're worth, hundreds of millions of dollars, Kim has never lost touch with the person that just wants to buy a duplex or just start. And she said something that affected my boys. She said, look, if you do nothing else, do something small just to put something in your asset column. Go buy an ounce of silver for $20 if that's all you can do. But get something in the asset column that doesn't leave. And once it's in that asset column, it's going to stay there. And my kids looked at me and says, how come we haven't bought any silver? So I asked, this was when they were young enough that, Santa was a big deal. And my son, Zach, he asked for some silver from Santa Claus. That's what he wanted for his That's
awesome.
Silver, man.
Did he get it?
He just purchased silver now with his lemonade stand money when he was a kid.
That's cool.
And now they have not a lot. They have more silver than the average kid. So whether it's buying an ounce of silver or getting involved in some cockamamie network marketing thing or whatever, you're doing something. A penny stock, I learned how to push the button. I didn't risk $1 zillion. I learned that it wasn't liquid. I'm learning the difference between what a penny stock and a small cap is. I'm doing something. And so I would not recommend a penny stock as a way to get rich, although I never bash an asset class, ever. Other people will. Well, business is better than real estate. No, stocks is better than commodities. Well, real estate's better than oil. Blah, blah, blah. Look, if I'm going to say real estate's a bad idea, I've got to knock on Kenny McElroy's door, look him in the eye and tell him he's a moron, which would not be possible to do, right?
Kenny McElroy is the Rich Dad Advisor, and I think he's got
$2 billion under management of real estate or something.
Yeah, like insane.
It's in the billions. If I want to say that oil is a bad idea and natural gas is too volatile and too crazy, I got to visit the family of the late T. Boone Pickens and say, great grandpa was a moron. If I want to say stocks are a stupid asset and they're a waste of time, I've got to knock on Warren Buffett's door and tell the greatest investor of all time that he's an idiot. I'm not willing to do that. And I can tell you this, there are people who have lost money and made money in every asset class imaginable. And so I'm a big fan of find your thing. Penny stocks is not my thing. But if it turns out to be your thing and you learn more about it than I do, and that gets you to heaven, great. But I would say at a minimum, trade a small share of something. AT&T just spun off Warner Brothers into Discovery, and that's Warner Brothers Discovery Inc. And that dropped their price because they took 25% of the value of their company and left their price just dropped 25%. So AT&T is in the teens. I don't recommend AT&T to get you wealthy. I recommend it because you can buy a stock. You can buy 10 shares for $190 now and see what happens. And you can go down $1 and up $1 and you're not going to lose that much.
Right.
You'll at least know how to click the freaking button and know what the option chain looks like and begin to do something either in a paper trade account or with very, very small amounts, and just start and put something in your asset column. And even if it's small, you'll feel better about having something small in your asset column than having nothing at all. So I'm a big fan of doing anything small. And as Robert said, when he was first starting, that's a growth deal, right? That's an opportunity for growth. So small cap stocks are different than penny stocks. Mm-hmm. Small cap stocks are up and coming new companies that are trying to grow. And those you can hit some. Warren Buffett, when he first started out, that guy bought everything in sight, and he hit a few dingers. And next thing you know, he has this textile company called Berkshire Hathaway, and they quit doing textiles and became a holding company for other stocks. And the guy has never, to my knowledge, he has never started a company in his life. He has always bought the ones that he liked. And now 43% of his money is in Apple.
That's crazy.
So there you go. And he did that when he was in his late 80s.
Okay, we're going to wrap this up, but I have to ask a question. Did Santa give your son silver? Wait, don't answer. Don't answer. Everybody listening, hit the comments, hit the likes. Let's spread Andy to the world. But seriously, if you do have a comment, please put it in there. If you have a question, put it in there. And also go to the show notes. There's Andy's free webinars in there. Yep. And there's access to his 4 Pillars course as well. So, all right, now Andy, I had to give you the commercial plug and help the show out a little bit. Did Santa give your kids silver?
No, our kids he was a pretty good boy that year. And I didn't see, I was thinking I might ask for some too. He didn't bring me any. So I must have, he was going to bring me some coal, I think, because I wasn't a good kid. But yeah, Santa came through, man. And
he did.
A little bit of silver, but they bought much more than Santa brought them.
Well, that's cool. And that's a great lesson. One of the things that when I first wanted to get into real estate, the first deal we looked at was actually a little slot in a mobile home park. So it's the same thing. It's not exactly real estate, but it still taught me a lot of the basics. And I started super small, like penny stocks, and it did help me. It educated me.
And I would say I know we're getting close to our time. I would say the other thing about Robert today is he is more a fan of being a wholesale investor now, because he's at a accredited investor, high level, and he's what's called inside. And insider trading is illegal, like Martha Stewart, ankle bracelet, all that. But before it's public, what he means by insider is the guys who own it before it goes public and they let the public buy shares. That's wholesale investing. For example, Robert, he's taken some gold mines public. He'll do another one, I believe, this next year, where he's bought all that stuff, probably 4 pennies on the share, probably 4 pennies. And he's getting into the wholesale. And then when it goes public, then a retail investor can buy it like you could, Apple or something else.
Right.
So he's already made his money, and it'll go public at a much higher rate than what he paid for it. And you get that by being on the inside of a good company. And that's really printing money in a way, because you're just inventing shares, and boom, that's a big one. So while that's for someone who is more matured in their investing and further along, it's kind of interesting to see those two extremes of taking a company public, and maybe perhaps he paid just pennies for what he had, and now it's big. I don't know what the numbers are on that, but it's very possible. So
yeah, that's cool. That's full circle right there.
There you go. So that's what little I know, and it is a little because I don't trade them. That's what little I know about penny stocks, and I've traded a little bit more in the. I used to ride iron condors on the Russell. In fact, in the Mentor Club, we're riding iron condors on the Russell 2000 right now.
Oh, that should be another show, because the iron condor is just a crazy.
Index, boom, pretty good premium, pretty big risk.
Yeah. All right.
I don't know how to manage the risk if you're gonna do that stuff.
How about this? We'll do that show next year.
Yeah, let's put that one way
We'll
out.
get everybody super educated first, then we'll do that.
Yeah, because that's a risky deal. We do it in the Mentor Club all the time, but those students have been around for a while.
Sure. All right, Andy, thank you so much. Appreciate you.
Thanks, man.
All right, bye.